Kanawat, the moderator for today's earnings call. I welcome and thank each one of you for joining us today for the Punjab and Sindh Bank's earnings call for Q4 FY26. Please note that this conference is being recorded and all participant lines will be in the listen only mode. There will be an opportunity for you to ask questions after the opening remarks by the management. Should you need any assistance during the conference call, please raise your hand on the WebEx panel or press star 3 hash on your phone. I repeat, should you need any assistance during the conference call, please raise your hand on the WebEx panel or press star 3 hash on your phone. I would now like to introduce the management of Punjab and Sindh Bank. We have with us today Shri Swarup Kumar Saha, Managing Director and Chief Executive Officer, Shri Ravi Mehra, Executive Director, Shri Rajiva, Executive Director, and Shri Arnab Goswami, Chief Financial Officer. I would now like to hand over the conference to Shri Swarup Kumar Saha, sir, the MD and CEO of Punjab and Sindh Bank, for the opening remarks, after which we will have the forum open for the interactive Q&A session. Thank you and over to you, sir.
Thank you, Mr. Ganesh. Good morning, everybody. On behalf of Punjab and Sindh Bank, I welcome all the participants and the analysts that have joined this analyst con call of Punjab and Sindh Bank on the Q4 and annual financial results of financial year 25-26. The bank's board has approved the results of the bank yesterday, and we have already uploaded the necessary disclosures along with the analyst presentation in the stock exchanges. Many of you could have already gone through the presentation, but to start the discussion, I would like to mention a few highlights of the bank's results, and then we'll have the question and answers. So the total business of the bank has grown by 14.94%, a historic growth for the bank, for Punjab and Sindh Bank, and it has touched 2,63,652 crores for the financial year. Deposits have shown a robust growth of 12.37%. Gross advances have also shown a very robust growth of 18.29%. The CASA, which has its own challenges in the current ecosystem, but the growth of our CASA deposits has been 10% plus, though the ratio has marginally dipped. But the green shoot of it is this, that we are continuously able to grow in this segment. The retail term deposits is a very, very encouraging sign for the bank, and we are growing at nearly 20% at 19.58% overall. So these were some of the top line numbers. In terms of the consistency in our operational income, the operating profit for the year has grown by 5.16% and stands at 2182 crore. The net profit of 1322 crore has been the highest ever historic profit of the bank in its history. It has grown by 30.12%. Net interest income was at a flat of 0.74% at 3812 crore. However, we like to mention here that the last year in Q4, in view of a resolution of a big ticket advance, we had a one-off interest income of substantial amount of over 200 crores in Q4 last year. And if we exclude that one-off item, our net interest income growth would be above 8% in the current year as well. Core fee income, which we have been talking about quite strongly in our various calls, and we have been able to prove that the bank is able to now generate a consistent growth in the core fee income, and it has come at 759 crore and growing at a handsome 22% plus. The non-interest income has grown by 13.47%. In terms of Q4 numbers, net profit has grown by 34.82%, nearly 35%. Net interest income, again, while it has, as per the numbers declared in Q4 last year, it has shown a dip of 13%. But again, as I just explained, in that one-off item of Q4 last year. If I exclude that, then the net interest income has also, on a quarterly basis, has increased by over 12.46%. In terms of quarterly numbers, the core fee income has increased by 28.81%, and non-interest income was at 427%. The asset quality continues to be robust. Gross NPA has reduced to 2.4%, net NPA at 0.79%, PCR slightly moderately down at 90.91%. Slippage ratio has been at 0.7%, and credit cost at 0.06%. The highlights again show that the bank is now growing in all the three segments of the RAM segment. The RAM percentage has now touched nearly 59%, and with a robust growth of retail, 24%, agriculture over 23%, MSME over 29%. Our capital adequacy remains strong. Yearly cost to income ratio is down at 60.97%. The return on assets also continues to yearly increase gradually, and we feel that this is in a positive trend of the bank, in which the return on assets will continue to improve. Our CASA and retail term deposit, the liability franchise, continues to show robust growth. The RAM percentage advances also show robust growth. In terms of the CASA and retail term deposit, if you put them together, the growth has been 15.48% in the overall scheme of things. And the other segments are all mentioned there. Our credit profile on external rating wise also, we find that this time there were some questions last time regarding the variance in the AAA rated and the AA rated borrower profile. We'll find that there has been an increase in the AAA rated borrowers to 18.05 sequentially. AA rated has also sequentially improved. So our credit profile looks very healthy. So overall, the operating profits continue to show consistent growth. Net interest income shows consistent growth. Net profit is showing consistent growth for the last 3 years. Core fee income is growing. And as far as margins are concerned, the net interest margin for the 12-month period was at 2.55. This is an area we'll continue to work on, because we need to mobilize more and more low-cost deposits to fund our growth story. The cost-income ratio has shown increase. As I already said, return on assets from March 24, it was 0.41, 25 it was 0.67, and now it is 0.79. Return on equity is also gradually increasing. Business per branch is also having good traction. Overall, on the other areas, as I said, the recovery of upgradation continues to also propel the bank towards further efficiency. The overall recovery and upgradation has been nearly 1,500 crores, and we continue to on this journey. The slippages has reduced over the period of 1 year from 801 crores to 678 crores. So the gross NPA percentage has gone down from 3.38 to 2.40. Net NPA has gone down from 0.96 to 0.79, and recovery in TW accounts continues to be in a focus area. Our collection efficiency has moved from 67% in March 22 to 96% in March 26. So that's a big improvement that has happened. In terms of slippages on this quarter, I think you must have all observed that there has been a slight uptick in the overall slippages of the quarter, primarily due to the MSME accounts. We find that there was certain residual stress, which we had told earlier in the agri and the MSME segments. So we have recognized those stress that was there in the MSME segment. However, overall, the gross NPA and net NPA numbers look reasonable. Credit cost is also very low. The SMA 1 and 2 of 5 crore is also at a very controlled level. We are, in terms of organizational structuring, we have done few organizational restructuring in the current year. We have opened 3 more zonal offices at Kolkata, Delhi, and Lucknow. and we have opened also four more regional offices at Raipur, Bangalore, Shimla, and Bhubaneswar. And we'll have a much more, so that we have a much more pan-India network. We are increasing our BC network. We are at 3,027 BCs now. We'll scale it up to more than 4,000 by the end of the current year. And various operational areas that we have highlighted on in digital enablement in RAM loans have been highlighted. Digital transformation, new features are getting added. We are adding lot of investments into our IT infrastructure and trying to build our operational resilience. And also, we have taken out specific programs for capacity building in the bank through our Navjyoti. Phase 1 and phase 2. The phase 1 has been implemented. Now we are in the phase 2. Phase 1 consists of primarily target setting, performance management, succession plan, etc. Now we are implementing the phase 2 of the Navjyoti project, which primarily focuses on capacity building of our executives, and we have taken out a plan of culling out around 125 officers from scale 4, 5, and 6, who will be specially groomed for the future leadership in the bank. So that program is going to be initiated very shortly. In terms of our guidance, whatever we gave last year for FY26, we could achieve most of them. However, we just fell short in our net NPA and PCR. However, we feel that the current year also will be able to achieve all of them. For the current year, we expect a deposit growth of 13 to 14%, advances growth of 16 to 18%. RAM, we expect to cross 60% of the total advances. Gross NPA to be below 2%. PCR will maintain the last year's level of guidance, 92 to 93. Recovery and upgradation will continue to be on a focus. We like to cross 1,000 crores this year as well. Credit cost and slippage ratio should be below 1%. So that's the overall snapshot of the bank's performance. I'm over to you, Mr. Ganesh, for the Q&A.
Thank you, sir. We will now begin the question and answer session. Ladies and gentlemen, we will wait for a moment while the question queue assembles. I request the participant to limit their question to two per person, and please rejoin the queue for any additional question. Anyone who wishes to ask a question may raise their hand by clicking on the raise hand icon on your WebEx panel. For those who have joined us via audio call and wish to ask question, please press *3#. If anyone is having connectivity or audio issues, you may share your questions on WhatsApp to us at 77386 88746. I repeat, if anyone is having connectivity or audio issues, you may share your question on WhatsApp to us at 77386 88746. Before asking the question, I request you to please introduce yourself and your organization. Our first question is from the line. Sushil, sir, please go ahead. Hello, Sushil, sir.
Are you there?
Hello, Sushil, sir. Am I audible?
You can move on, I think.
Sure, sir. Sure, sure. So next question we have from Ashok, sir. Hello, Ashok, sir.
Are they muted?
Yeah, I'm unmuted actually now.
Oh, yes, yes. Okay.
Go
Yeah,
ahead,
good
sir.
morning, Mr. Ajmera. Yeah, yeah.
Yeah, so Sasab and the entire team compliments to you
Thank you.
for the highest net profit of the quarter and the year. I think 422 crore for the quarter and 1,322 crore for the whole of the quarter, which is very heartening to note. And what is another point is that after a long time, I mean, uh, all the targets which you had given, you not only touched those targets, but even you went much beyond that only. If you look at the advances, especially which the guidance was given at 15-16%, and you have done 18.29%, which is again another creditable point. Even
Thank you.
deposit growth in these difficult times also is very good for the bank. RAM also you have performed well. So on the whole, a fantastic performance for the quarter and the year, sir.
Thank you.
Having said that, sir, the my first rather I would say not a question but sort of an observation, and also to hear your comments is on the ECL guidelines which have been finalized by RBI. That now, of course, the time is very short when but you have been working on that for a long time. Every bank is working on that. So where do we stand on that to meet the ECL provisioning and challenges, which starts from April 2027?
Correct. Yeah. So, thank you, Mr. Ajmera, for your observations of the bank's results.
इधर तो लिंक
We
भी नहीं कर पाए.
will continue to meet your expectations as we move ahead. On the ECL framework, the RBI has just taken out the guidelines yesterday. As you rightly observed, that we have been working on this matter for quite some time in the bank. The guidelines, final guidelines, have just been announced. So we first of all we need to um, study that. We were all busy with the results, so we were not able to really go into the uh, deeply into the circular so far. However, from the overall scheme of things, my CRO, Mr. Dheeraj, is here. He will take this question forward. Is that overall we feel that as the RBI has given a room to spread the uh, to implement it and spread the expected credit loss over a period of 5 years. I think we are well positioned, and it is going to be taken into the reserves P and L reserves segment. So I think we are not in a too much of a uh, we are more or less in a comfortable situation, and we may gain somewhere, we may lose somewhere. Overall, we have to just go through the circular in deep, because certain changes they have done on the risk weight also, and in totality, how where you have to look into up to 500 crores. They have on the unrated part, they have also made some changes in a different circular. So overall, we have to now work together and conceptualize the requirement of RBI in the bank based on our legacy accounts. Now, I request Mr. Dheeraj, our CRO, to
Yeah.
clarify anything which he feels at this point of time.
Ajmer sir, good morning. This circular is very much in line with the draft guidelines only, and like any other bank, we also was preparing for this, and overall in a good shape to develop the models and all. But now since clarity is there, so we'll be doing the final calculation and all. As far as impact is considered, since those two circular, one is ECL and the other one is on our RWA calculation and all, both are coming. Will be implemented from the same date. So overall impact will be easily absorbed. And the second is around the 5 years glide path which has been provided. So that will, and the entire impact will be on the capital part only. So overall impact will be not that much actually. What we are expecting anywhere between 600 to 800 crore, to give a number, although not right to give a number at this point of time since my numbers are yet to be calculated. But overall, what I'm saying is over a 5 year of time, this is quite comfortable and we can easily absorb it. And over a period of time, since my credit quality also have improved significantly, so my PD number also will has come down drastically. So then this will help me in reducing my overall ECL impact.
So, Dheeraj sir, I mean, when you say 6 to 800 crore will be the impact, have you built up already some cushion in the pool so that you can take it in one go, or you are going to spread? And when you say 5 years, is it 5 year or it is only up to 31st March 2030?
No, 2031 till
So,
2031. From 27 to from 30, this is EIR, applicability of effective interest rate. I'll go through again since you have raised this question, 30 or 31, but till 31 I think it is there. And that EIR application is from 2030, from 1st April 2030. But again we'll go through it since it
yeah,
has
I
come
think
yesterday only. And
yes. And how much we already have the cushion or the buffer against this expected loss?
like since it has to happen through capital only, so even if like 600, 700, 800 crore also, even if the impact, it can be easily absorbed, like around 200 crore will be the impact on even if it is 800 to around 160 crore will be the impact, so it can be easily absorbed in the this from the bank's capital buffer itself.
So our capital adequacy will not be impacted much,
Will not
isn't
be
it?
impacted much, will not be impacted much.
Yeah. No, thanks for clarifying this, and we will have further discussions now going on, because still 4 5 banks results are still left, and I think we will have a chance to discuss with the management.
Yeah.
Sir, on this slippage front in this quarter, Sadab, it's increased to 355 crore as against to 168 crore in the last quarter. But at the same time, the SMA2, 569 crore has gone down to 96 crore only, and SMA1 has little bit increased to 515 crores. So the whole combination, what color it gives? The slippages are because of some account from 2 to NPA, or the miscellaneous small amounts which were already like were taken in consideration.
Yeah, I think as I was making in my opening remarks, in terms of the slippages this quarter, these I had told in this various interactions in this ConCalls has been that while the overall asset quality continues to improve and become healthy for the bank in terms of corporate segment and the retail segment, there is still some residual stress in the agriculture and the MSME. And MSME is a direct product of various developments in the economy of the country, the global situations that happen, and it directly impacts the small MSME. So it is it's not a matter of concern for us at this point of time because our collection efficiency is very robust. These are some of the weak accounts which we thought let us recognize it and move ahead going forward. But in view of the certain developments on the national and international front on the economic side, we need to be alert on the MSME segment, the stress that may build up in the MSME segment in the future. But as of now, we don't foresee any grave challenge. It is just that we thought instead of carrying on with the stress, as per the IRAC norms, whatever was needed to be downgraded, we have downgraded them, and we will move ahead. In terms of the SMA, yes, if you find the overall number of SMA plus SMA 1 and SMA 2 above 5 crore, you will find that in the December quarter, say March 26 quarter, it has significantly come down. As I told earlier also, these numbers look inflated for the bank in view of the two state government guaranteed state government accounts. So it goes from one place to another place. But one good part, if you overall see, is that those accounts continue to be serviced well. There is no issue there. They may slip in 0 or 1 and 2, and again move into a cycle. So the SMA2, this important part, SMA2 has come down significantly, and the SMA1, which was one state government account, that also has cleared its dues in the course of April. So these things will continue to happen, but we don't foresee any inherent potential for account getting slipped because they are servicing in terms of the circumstances and because of the state government guarantee available. So overall, my SMA book, which was at one point of time, I'm taking the total book, which was over 9% at one point of time. And now we are hovering around 4.21%, including these two state government guaranteed accounts. So if I leave out that two state government guaranteed accounts, my SMA would be around about 3%. And that's a pretty good number for the bank to have. But we need to be alert. We need to continue our efforts to improve our collection efficiency, particularly in the agri and the MSME segment.
Sir, one on the NIM side, the continuous quarter on quarter, there is a reduction, though the overall NIM for the year is 2.55, which is also lower as compared to and I understand there is a pressure on NIM. But going forward, uh, uh, what do you think? I mean, what are the plans, to take the NIM little higher from the current levels? Uh, how do we
Yeah,
like
we are
the
conscious of this.
credit mix or
Yeah,
yeah,
yeah, we are conscious of this. The bank has a historic NIM, low NIM, of a low CASA because of the low
yeah,
CASA
low
and
CASA no NIM,
and
yes.
the fluctuations of the repo rate also has impacted it. But we feel that now we have absorbed the entire cycle of the repo cut of 125 bips, and we have taken various steps to improve our lending in the high yielding side, particularly in the agri MSME segment. In the corporate side also, we have been selective in terms of choosing our asset, and the pricing has been very it plays a very important role in what we do. So we said that we also churn our balance sheet portfolio, credit portfolio among the triple A's, double A's, and A's. We get good. We're doing a good, robust co-lending. We have a good, robust co-lending platform over 10,000 crores that gives us good yields, but it will take a gradual progression will happen. So overall, we feel that by the end of the current year, we should be touching 2.65 to 2.70 in terms of the NIM. So we are moving in that direction, and we'll move, and we expect that with the retail agri MSME percentage going up further, and with no imminent visible
Yeah.
rate cut scenario that is on the cards, hopefully, we feel that the now the cycle will move on the means in terms of our income, it will move on the upward direction.
And the same will happen in the treasury also. I think the
Yes,
treasury
yes,
also will start generating better
yes,
profits.
yes, yes. You have observed that the yield movement has impacted many banks' balance sheets,
Yes.
and we hope that as the Gulf situation improves, we'll have a favorable right back in that area. But we keep our fingers crossed in that area.
But this geopolitical, I mean, the variation, I mean, this war has so far not uh, been seen visible on our portfolios. Any impact?
No, not really, not really. I think government is much aware of this. They are going to sectorally. They are handling it. They will be, I think, working on some packages for various segments. But as of now, in our portfolio, yeah, small MSMEs will get impacted if this lingers on a bit more than normal. That we feel that can happen. We're not having too much of forex business, so from that part, we are a bit immune on the impact. But overall, MSMEs, if in the long run this uh, continues to happen and without any plausible solution, there could be some futuristic cash flow impact on the MSMEs.
Okay, sir. Thank you. All the best to you, sir.
Thank you.
And
Thank you, Mr. Jivan.
we will again have some chance to discuss it further.
Yeah,
Thank
yeah.
you.
Thank you.
Thank you, Ashok sir. Next question we have from Sushil sir.
Can you
Hello,
hear me
Sushil
now?
sir.
Yeah,
Yes,
yeah.
yes.
Yeah,
Please
good
go ahead.
morning, Mr. Phil.
Good morning, Team Punjab Sind Bank, for a very stable and a well-guided management team has taken good pains to stabilize. Sir, you've strengthened your human resource. You've strengthened your HR processes. You've done well on digital to expand the footprint and otherwise. And even on working process, you have improved. But global challenges are going to emerge from where MSME and retail is concerned, because income levels are going to be hit. So, how is the April visibility in terms of bounce rate, new sanctions, Because you have guided for RAM at 60% specifically, and foreign inflows also have stopped where individual or markets are concerned.
Yeah, I think that's a fair ask that Mr. Choksi is asking. And from that perspective, as I said to Mr. Ajmira's question, is that while we have taken various steps to improve our efficiency levels, the global situations, the hangover of the global situations will continue to impact the Indian banking system or the ecosystem. We need to be alert. We need to set benchmarks within the bank in terms of customer onboarding. Our business rule engines for the digital segment needs to maybe further relooked into. And overall, there is no room for complacency in terms of while the going is good, we should create proper mitigants in our journey, so that in any circumstance, if a circumstance arises in terms of any severe impact of the into the global situation, we should be able to be resilient enough to handle that situation. As of now, what I can at this point, what we foresee is that we expect the resolution in the global situation will be happen in a course of time, that it has its own trajectory, but it will happen. And if it happens in a short period, then things will get again back to normal in terms of certain, though there will be a short-term impact somewhere. So we'll keep ourselves alert. We'll work on the ground. We'll keep our field functionaries alert that and keep in touch with the customers if they find any inherent weakness building up in them. And that's how we will continue to monitor aggressively. We'll also be a bit more strong in our onboarding processes, on our underwriting processes. That will happen. So overall, and in terms of, yes, that what you said, that regarding the trajectory of the new sanctions, I think our trajectory shows that MSME is still going pretty strong in our sanction rate. Retail is also going very strongly, over 25%. So the sanctions continue to happen. In fact, last year, if you see, I forgot to mention that in the food and agro segment, there are also we did a lot of work last year on the agriculture front. And I think you have shown it in one of the slides, that the food and agro has grown significantly compared to last year. So farm credit, etc. So I think we'll spread our risk amongst the three segments and build strong measures. But as of now, we feel that and one more thing on the structural side, if you see, we have also now decentralized some of our big zones that we had. Like we have carved out now we call them regions, of course. We have carved out a new regional office in Raipur. It have carved out a regional office in Bangalore, Bhubaneswar, Shimla. So what brings to the table is this, that they become much more decentralized control on the branch network, on the customers, which will help the bank to be more efficient, to be more cost effective. That's all we will continue to pursue.
So then what is your digital spend? What is unavailed credit sanctioned up to current date? You said retail RAM is still looking, specifically MSME is looking 25% uptick. Is it because of reassessment due to various raw materials spiked by 30 to 50%, or it is existing limit and existing customers which are asking more limits?
Yeah, it's a mixed bag so far. We are getting a lot of leads. We are as of the pipeline on the credit side, on the corporate side, we are around 18,000 on the corporate side. And if you see the last time when we discussed, I think we talked around 10-12,000. So the pipeline is now increasing. Pipeline is increasing in various segments. Pipeline is increasing in logistics like data centers, etc. On the infrastructure projects. LRDs on these are the pipeline that is increasing. On the overall retail agri MSME segment, I think as we go more and more digital, as we go more and more efficient way of delivery, I think there is still space in the market to garner more and more these sort of advances in the market. So it is a mixed bag for all of us to work on. Renewables also, we are getting good leads. We are working on that. So overall, things are looking on the credit cycle as far as our bank is concerned, and our appetite is concerned. We feel that we have enough room to grow at a rate that we have just projected around 16 to 18%.
So as on today, you don't see meeting your targets which you have announced. Meeting them seems a challenge.
Sorry, I didn't get you.
I mean, deposit of 13, 14, advance at 16, 18, RAM at 60%, gross NPA at 2. You don't see a challenge in any of these?
No, not at all. Not at all. Yeah. On the bottom line answer is no.
Sir, if I ask you other way around, what are the three things which you would like to do differently than what you've done in last 3 years, which would strengthen the bank?
See, that requires a bit of time to answer. But anyway, to be on a pointer, I think we need to, as we have already said in our various communication, our operational resilience has to improve. Over first of all, the threats that are coming, the media reports that are coming in various ways. The new threat of Anthropic is also playing out in its own way. So and the dangers of mule accounts, digital arrests, and ALM, money laundering. So many things are coming up in a different mode this nowadays. So the first and foremost thing, as a financial institution is concerned, is that I think the operational resilience has to be upgraded in a large way, and that's how we have brought in we have given some slides in the presentation that can be looked into. And so, in terms of while we are taking a lot of care on the cyber front, the Resilience Operations Center will be implementing another 3-4 months' time. That will give a lot of visibility and cyber security. That's number one. Number two, we still need to work very strongly on our branch network and expanding in the areas by culling out areas by data points where we can expand much more productively. We have engaged a global consultant to identify locations across the country where we are presently there or we are or less present, and therefore we will identify the pockets where we need to expand, and which will give us much more organically and on a pan-India basis, so that the growth has to be on a sustainable basis. Thirdly, we have to work on our digital transformation. We are now, the board has approved to go ahead with the next round of digital transformation in the bank. That is an area which we'd like to complete in this financial year. We'd like to launch the Unique 2.0 by the end of the financial year, which will have all the features of value-added features which any bank is providing to any customer, that will enhance the customer experience and also bring in fresh acquisition opportunities for the bank in terms of the competitiveness in the deposit world. So expansion, digital transformation, operational resilience. There are some more, but as you asked three, so I just pointed out three of them.
So what is the budget for AI, cyber, and digital footprint, and the new roadmap for version 2?
Budgets, Ratneshji, do you have the numbers now? Or we are increasing around 2x our budget, but the exact number we will provide to you separately.
So I'll come back in queue if there are further questions. Thank you for answering all my questions, and all the best.
Thank you, sir. Next question we have from Brijesh Mangi.
Yeah, hi, very good afternoon, Punjab and Singh team.
Good afternoon.
Yeah, so my first question is, sir, what are the key drivers for growth in the gold loan portfolio in the coming quarter? Hello, am I audible to you?
Yeah.
Yes.
Yes. Any other question you have?
Okay, so what are the benefits are you seeing from investments in CRM, automation, and chat boxes?
Yeah. So in the gold, the key drivers, of course, we are now working on the both organic and inorganic. We are doing a lot of organic growth, identified branches for which can do gold loans. We have created specific SOPs, revised our SOPs, revised our guidelines so that while the portfolio is increasing, we don't our risk absorption appetites are also worked accordingly. And it will be we'll also do our network through our branch network and also through the NBFC's co-lending model. So we will work on that both on the agri and the non-agri part. And if you find that the key driver, one of the answer would be that organically also we are growing over 100% in the gold loan portfolio. So we'll have a mixed bag, both organic and through the co-lending. The second question that you had regarding the CRM, we have just established the CRM model, the chatbots. These are all are in today's scenario a basic necessity in terms of customer experience. We feel that we have already started feeling getting the benefits of this CRM. We have created a specific lead management cell within the bank. We have also created a marketing vertical within the bank. It's a new vertical that we have put in. So overall, the leads that are being generated through various methods are getting captured in a very professional manner, very systemic manner, and the leads that are going to the branches or the other offices are followed up to their logical end through these specialized verticals. As far as the chatbots, etc., these are customer-facing models that we have implemented. It reduces the pressure on the call center at the back end. Many of the information that are provided to the customer through the chatbot on the website helps them to interact with the bank in a much more modernized manner and efficient manner. So the benefits are multiple, and as we go along, we have just implemented last year. We have stabilized the entire process. Now I think we will be able to go ahead and take the benefits out of them.
Okay, noted, sir. Thank you. Have a nice day.
Thank you, Mr. Brijesh.
Thank you, sir. Next question we have from Sushil, sir. Sushil, sir, please go ahead.
Sir, we are focusing on our RAM. Can we assess how many builder types we've done in NCR and the regions where we are strengthened? How many auto tie-ups, tractor tie-ups, EV manufacturers tie-up? How are we focusing on the portfolio which is more profitable? You may have more share from a wallet of an individual customer in terms of various products. How many such tie-ups or co-lending partnership we have done that we can strengthen our processes?
Yeah, good morning, Choksi sir. Ravi Mehra this side.
Good afternoon, sir.
Sir, somewhere around 85 types have been done for the housing builders during the last financial year. And as far as the co-lending partners are concerned, around 11 partners are there as of now. And with regard to the vehicle tie-ups, we have done with Mahindra and Maruti, and we are also looking for going forward for Hyundai as well. Hyundai and Toyota.
And in two-wheelers, sir? Or we are not doing two-wheelers?
Two-wheelers, basically, we do sanction, but we don't have any tie-up as such.
Second hand. Okay. What I can add here is that now we have the digital product on the second-hand vehicles, which is expected to give us returns. So we'll be tying up with this agencies.
Maruti True Value,
True Value, etc. I think 3-4 agencies are there.
Yeah.
Which are there?
Cars 24,
Cars 24,
Spinny.
Pini. So these are in the pipeline now.
So how large is the portfolio on second-hand vehicles, because it's more lucrative than normal cars, new car financing, and what is the growth visibility in that sector?
We're just commencing our journey in this. It is not very much, there's nothing to be too much of a figure at this point. But we have now devised the digital journey for that. I think that was important for us to, before we launch the product in a bigger way. As of now, I don't think it is too much of a traction. But with this new digital method of lending on this segment, I think we'll get a good portfolio.
Thank you for answering my questions.
Thank you, Mr. Sushil. Thank you.
Thank you. Thank you, Sushil sir. Next question we have from Ashok sir.
All right, sir.
Ashok sir, please go ahead.
Yeah, thanks for this opportunity again. Sir, now since we have broken the taboo that of little lesser growing bank and this thing, and now we have in fact outperformed on every front. I mean, going to even especially on the even the deposit franchise deposit front also, and but our perennial basic problem has been lower CASA, and that is resulting in the lower NIM in spite of building our book well. So, sir, I mean, going forward and being a bank which is, I mean, so strong now, if you just forget about the numbers, the overall size, that the bank can deliver anything and everything which any other public sector bank or any other commercial bank is giving. So, on the pan India basis, and can we do something something radical to reach out to the people across the country? Uh, what are our, I mean, is there any thought on it? Is there any, what are our plans on this going forward? That, like, okay, now since we are already in the 18-20% growth zone, why don't we plan for next 2-3 years because base is low, so little higher growth in absolute numbers. So is there any strategy to bring up the overall business of the bank going forward?
I appreciate your point. Is that regarding the a bit more faster growth if possible, and whether the bank is in working in that direction. First of all, let me give our observation on this. While growth is essential, growth has to be qualitative, and therefore it has to be much more. We are building organization which will last for a longer period from that perspective. So while the ask of a higher um, delta growth is what is all we aspire for, let us also look into, every bank has its own legacy, every bank has its own way of doing things, every bank has its own network channels and its strengths and weaknesses. So what the basic point was that if you see, we have put in a slide in the presentation where we have given a comparison of how the bank was growing in one period of time and how the bank is growing over the last few years. You will find the difference. Now, it is better to move steadily, steadfastly, organically, and structurally strong, in a structurally strong manner. That is the first part of the your observation. The second part, what are we doing? The second part is exactly, if you see, and these things that were happening, if you see comparison of 5 years now and 5 years earlier, it cannot come in without our teams getting mobilized better, our systems getting robust, etc. So there is some effort that has gone there. In terms of macro numbers, I'll say that we intend to achieve 3 lakh crore by the current financial year. That's our aspiration figure. We have taken a board approval to achieve 4 lakh crore by financial year FY29. That means we need to add around 50,000 crores in the next 2 years, 3 years per year, 50,000 crores per year. So overall, the aspiration is to reach 4 lakh crore, and we have devised a strategic roadmap for achieving those numbers. And therefore, we feel that we are in the right track now. Why should we push further? That's an internal assessment that we'll take at an appropriate time. But I don't think that is required. It is better to grow in a structurally structured and a solid manner without compromising on any other areas of governance standards, right? And therefore, if you see the various, we have now organizational restructuring we have done in terms of strategy. What are the strategies that we have taken to grow faster in that way? Faster means, when I say faster, means qualitatively faster. So restructuring we have done in terms of the organization. We have now created a 4-tier structure across the bank. We have 5 zonal heads office where GMs are heading that. We have a new zonal offices, regional offices created. Now we have 33 regional offices. We are expanding in terms of branch network across the country. We are planning to open 200 branches. We have created marketing vertical in the bank. We have now introduced tab banking for customer acquisition, CRM for lead generation. We are leveraging on our digital initiatives. And more importantly, we are now very, very strongly monitoring our branch-wise productivity. That is an area where we will like to work in the current year. Our business per branch is around 158 crores, which is increasing, but it is still much below the average of the industry. So we are now working on branch rationalization. How do we improve our branch productivity across the bank? Open new branches with substantial business. We have engaged a global consultant to identify the locations for us. We are creating a lot of products. We have got new Central Connect products for salary employees, for salary accounts. Now we'll expand that central government package to the state government and other PSU employees. So we have a definite plan to take up to achieve those goalposts that we have envisaged. And we have, of course, I've missed out in our a very important development on the gift city. We have got
Yes,
the
sir.
RBI approval. I'm sorry, I missed out in my earlier
Yeah.
deliberation. The gift city is very important for the bank. We expect to launch it by October this year. We have got the space also. Some 1 or 2 more approvals are required. Staff has been identified, and to put in, they are going to join that area in this week. The entire staff has been mobilized. The premises have been finalized. Some approvals are need to be taken. The IT systems are getting ready. So that again will give a good fillip to our business strategic growth to achieve that 4 lakh crore by FY29. Thank you.
No, sir, it's a very encouraging. I mean, that's what I wanted to hear. A 4 lakh crore bank by 29, 30, and maybe 5 lakhs immediately the next year thereafter. So that's what exactly is required, to reach a something, like a critical mass, so that from there, then there is no stoppage to do anything which you want to do. And this gift city thing is, yes, definitely, I think many of the other banks have also adopted, and it is yielding good results. So, sir, when the question comes on that, then the main question comes up about the manpower and the training for the working day-to-day working, training on the advances, credit side, liability side, training for mainly the compliance side, which is also a very big now issue these days. So many of those banks have carved out this training part from the HR. Is there anything has been done like learning and development, a separate vertical where the major emphasis given on the ongoing training to the staff, the new recruits, and especially so many new provisions are coming, legal things are coming, compliance things are coming. So what are we doing on that front, sir? Is there, because I am little not much aware about that happening in our bank.
Yeah, I think we of course adopt best practices in any way, anything that happens in any segment of a bank governance. And capacity building is very important, as you rightly said. So having understood this, that's why we launched this Navjyoti project. BCG is advising us on this. And we, in the first part of the project, we implemented the target setting, succession plan, performance managed system, tool-based assessments, so many things that we have implemented, which will give much more flip to the staff members to work on their target achievements, etc. Number two, this year the Navjyoti Part 2 is only on skill development, and that is exactly what we are doing through the BCG again, where they have worked with all the banks, most of the nearly all the banks in this area. So we are getting the best of the best practices which are getting implemented, and as you rightly said, that learning is a continuous process, and the new threats that are evolving, new operational guidelines that are coming, we have to remain updated. So we are taking out in multiple fronts at the junior level, regular. We have now opened a new center of excellence. I missed out that also. We have opened a second training college in Chandigarh. It's a state-of-the-art training college that we have opened in Chandigarh because we have a significant presence in Punjab. So we thought that let us have a good setup in that. It is a state-of-the-art that we have created, excellence center that we have created, and so that we'll have two training colleges. We are also tied up with various other NIPSCOM Noida, with other big management institutes, MDIs, IIMs, SBI Academy, all the other big banks, academies. So we are using those platforms to send our people. And the new dimension that we have brought this year in our skill development is that we'll be identifying, and we have identified 125 officers through a process at the 4 chief manager, 5 and 6 levels, who will be given specific trainings on the various events that are required to groom them as future leaders of the bank. They'll be given personal coaching also. Coaches will be provided individually to each of the 125 participants, and they will get a flavor of how personal grooming is also personal enhancement is also important while you do executive stuff, executive delivery. So a very professional way of doing things. We are identifying people which we send abroad. We send good who have performed well to encourage them to good trainings abroad, and we'll continue in multiple fronts. As far as creating a separate vertical is concerned, we'll take that call at an appropriate time. We feel that at the present juncture in our setup, within the HR, it is good enough. I think there's a good setup within the HR on learning and vertical, on learning and development. I think that is good enough for us. Whether we need to segregate it from HR, we'll take an appropriate time. So bottom line is this, that this is an area which we have identified as a very key priority for the bank, and an HR transformation exercise. That's why getting carried out in the bank, and this will be a continuous process that will continue to happen.
Thank you, sir. Thank you, everyone. As there are no further questions from the participants, we now conclude this conference. Should you have any further queries, please reach out to Mr. Ganesh Shankannawar at 77386 88746 or at ganesh@conceptpr.com. Details are mentioned in the WebEx chat and the analyst invitation sent to you earlier. On behalf of Punjab and Sindh Bank, I thank you each one of you for joining the conference call today. You may now disconnect your lines. Thank you. Have a good day.
Thank you, Mr. Ganesh. Thank you all for joining. Thank you very much.